How do mortgage interest rates affect home affordability? Hey, I'm Trae Dauby with Dauby Real Estate, and I just got an email and I decided I wanted to shoot a message and get the word out. Interest rates are on the climb. I talked about it with my 2022 prediction that they're expecting rates to go from 3.1% up to about 3.7% by the end of the year. And the number that I saw today was actually higher than the 3.7%, which is why I wanted to hop on here and kind of explain how the whole process works. So a local mortgage company, they send me rates daily, and I'll take a look at them, keep an eye on them. And I noticed last week they were at 3.625. I thought, wow, that's high. I got it today. They were up to 3.875. So I searched back, and on December the 21st, the same company was at 3.375. So their interest rate has gone up 0.5% in about just under a month, essentially. So how does the rising interest rates affect your affordability? So a rough rule of thumb is a 1% increase in your mortgage rate affects your affordability by 10%. So what does that mean? So if interest rates go up 1% and you are planning to buy a $250,000 house today based on your monthly payment, if rates go up 1%, you can no longer afford that $250,000 house for that same payment. You can now just afford a house that's $225,000. Now, you add on to the fact that the average sales price went up 13% last year, and it can really, rising interest rates and appreciation can really hurt how much home you can afford. We've had people sit on the fence the last couple of years. They've said, hey, I'm gonna wait till home prices drop. Well, we have an inventory problem. Home prices aren't gonna drop anytime soon because we have an inventory problem. So the people that sat on the fence last year, home prices went up 13%. The people that sat on the fence in 2020, home prices went up 9%. Yeah, that's right, 9% in one year, 13% in the next. So if interest rates go up 1% this year and homes appreciate by 12.5%, that house that you can buy today for $250,000 is down the drain. You can't afford that anymore. Now you're buying a house at the end of the year that you could have paid $200,000 for today if you have a 12.5% appreciation and interest rates go up 1%. So if you're thinking about buying, there's no better time than right now. If you're thinking about selling, if interest rates go up, it will affect people and how much they can afford. So obviously selling in a lower interest rate market is a great time to sell. Now don't panic. Rates aren't expected to climb like 1%, 2%, 3%. As I mentioned, they're expected to go up around 0.5% this year. We're seeing a lot of that now. They may come back down, no promises. As we can see, the trend is up. The experts are saying they're going to go up throughout the year, but don't panic. 3.875 is still ridiculously low. In fact, 3.875 is even low compared to in November of 2018. I remember rates got up to almost 5%, and we thought they were getting high at that time. So if you look at the national trend, I mean, we've been under 5% for about 5 or 6 years. I don't think that's going to change, but I do want you to keep an eye on the market and interest rates, and there's no better time to buy or sell than right now. So if you have any questions about interest rates or the housing market in general, feel free to send me a private message. Again, I'm Trae Dauby with Dauby Real Estate. Hope you have a great day.